everyone. We are excited to be featured on the Investment Diversity Exchange's speaker series. With me today is Rodrigo Garcia, Deputy State Treasurer and Chief Investment Officer for the state of Illinois. My name is Dolores Munoz. I am a Senior Relationship Manager at Cabrera Capital Markets. Founded in 2001 and headquartered in Chicago, we are a premier Hispanic-owned and operated global investment banking and full-service institutional brokerage firm. Our areas of expertise are investment banking for corporate debt and municipal debt, as well as domestic and international equities and taxable fixed income. Rodrigo, it is a privilege to interview you for the Titan series. For those that are unfamiliar, can you please discuss what the Illinois State Treasurer's Office is responsible for and a little bit about your role?
Of course, it's an honor to be here. And thank you for the work that Cabrera Capital Markets has been doing in order to advance equity, diversity, and inclusion over the last two plus decades. Now, the Office of the Illinois State Treasurer, under Treasurer Michael W. Ferretz, is dedicated to prudently investing money on behalf of the state, on behalf of units of government, retirement, and college savers, expertly managing the state's multiple banking functions and providing exceptional financial services to individuals and government bodies in Illinois. Our decisions promote economic growth, education, access, affordability, and an opportunity for individuals and government bodies across our state to give families the tools to achieve the American dream. The Treasurer's Office is committed to fulfilling this mission in a highly professional and ethical manner, while striving for transparency, efficiency, diversity and inclusion, sustainability, and most important, the preservation of public trust.
It's impressive. As we know, the pandemic has magnified and accelerated the ratio in socioeconomic inequalities. How do you use your role at the STO to enact change?
Great question. It takes a structured framework to facilitate change in such deeply rooted social issues. I would say we have to start somewhere. And for me, it starts at the top with leadership. From there, it's a change in mindset with the corporate philosophy. Then it is about cultural competency, which is the policies and processes that a organization has. Then from there, it's thinking outside the box, the level of ingenuity that you're willing to put forth in order to pivot and change the paradigm. And lastly, it's about accountability, how we measure and evaluate the components that we're trying to put in place. These are all critical dimensions needed to address the realities of today's disparities. When investors design and apply policies, practices, rules that appear to be neutral or innocuous, we believe they're not having an impact, but yet when they result in a disproportionate impact on communities of color, we are inadvertently promoting prejudice and biased systems. We must stop. And that is why our office believes that our government and its investment activities should mirror the diversity in our state. And beyond that, diversity is good for business. Research demonstrates that diverse-owned companies are often well situated to ascertain capital inefficiencies in the market. And as such, many are primed to outperform their peers. That's why we are focused on providing more investment opportunities to financial firms that are owned by minorities, women, military veterans, and people with disabilities. And we want to partner with other financial firms that have a record of institutionalizing equity, diversity, and inclusion within their firms. Since 2015, the Illinois State Treasurer has increased the utilization of diverse broker-dealers from approximately 1% to 90%. In FY 2014, that's par lines for fiscal year 2014, which is when we came in, total assets brokered with minority firms, and when I say minority firms, it's inclusive of minorities, women, military veterans, and people with disabilities, was approximately 600 million per year. In this most fiscal year is 2019, total assets brokered with these type of firms was 45 billion, ladies and gentlemen, billion. That's 75 times more utilization. We're talking about broker dealers that include but are not limited to Cabrera Capital Markets, Loop Capital Markets, Great Pacific Securities, Drexel Hamilton, MFR Securities, and Mishler Financial Group, amongst many, many others. Now, that's where we started. In December of 2014 to 3.9 billion in June of 2020. That's a 216-fold increase. Another area of interest for us is also corporate board diversity. Diversity is a cornerstone of investment. We know that. Increasing returns by increasing perspectives. As the leader of the Midwest Investors Diversity Initiative, we're about a 13 to 15 member investor coalition, depending on when you're watching this, that is seeking to advance corporate board diversity at companies headquartered in the Midwest, leveraging about 900 billion in assets to deliver results. Since 2016, we've engaged 52 companies, of which 37 companies have committed to changes. And we've added 67 corporate board members that are diverse, that have been added to these corporate boards. Similarly, but in addition, we're also a leader in the 30% coalition, where the Illinois State Treasurer as an office and fellow investors have engaged 300 companies that have now appointed a woman to their boards. They change their mission to include people of color as well. Ladies and gentlemen, talent knows no gender, race, or ethnicity.
Takes me to my next question. With the increased unemployment, decreased consumer consumption, and growing income inequality, communities and small businesses lack access to capital and affordable basic banking services. How has the STO responded to these banking issues and ensure sustainable investing?
Like food deserts, we have banking deserts. This means that entire neighborhoods have no or minimal access to capital. Many have deemed these communities as not profitable or not profitable enough. Small businesses in underserved areas are a powerful economic engine, generating jobs and wealth where resources are scarce. Entrepreneurship is a potent tool in closing long-standing wealth gaps. As COVID-19 threatens to permanently shutter small businesses, it is important to consider and adopt policies that promote alternative and flexible sources of capital from nimble institutions like credit unions, community banks, community development corporations, community development financial institutions, community land trust, and microlenders, to name a few. This ensures that small business enterprises have access to capital, not just those with the resources and the relationships. Amid the COVID-19 pandemic, and with a spotlight on inequality, expectations for private companies are rising. Today's world poses a test both on the breadth and durability of corporate purpose, shifting the dynamics for thousands of companies as they confront new challenges and expectations. Thus, the purpose of large private enterprises to solely serve the short-term interests of certain shareholders is being questioned more than ever now. There is a positive consequence resulting from the pandemic. It is the accelerated shift to stakeholder capitalism and away from a company's singular emphasis on shareholder profits. The importance of employees, customers, suppliers, and the communities in which they operate has brought the need for stakeholder capitalism into sharper focus. When companies do things like increase healthcare benefits, increase pay for workers on the front lines, lower executive compensation in order to help avoid layoffs, and take additional steps to protect workers, they benefit from a more engaged and productive workforce, a more loyal customer base, especially following the pandemic, and a stronger reputational brand. That's why Illinois became the first state in the nation to pass a law, the Sustainable Investment Act, establishing a framework for public fund managers to integrate sustainability factors into their investment portfolios. On the other end of the spectrum, institutional investors also have a pivotal role. We should be constantly evaluating the diversity of our management teams and our staff. We should be leveraging investment stewardship to promote racial and ethnic equity. We should be voting our proxy statements in alignment with fair and equitable corporate practices. We should be investing with funds led by people of color. We should be investing in diverse-led businesses that are addressing issues in communities of color. And we need to hire firms with a proven track record of equity, diversity, and inclusion. We need to drive change towards a free, just, and equitable society. The work is more important than ever now. We need to work in partnership to rebuild our communities, address historical and structural inequities, and take full advantage of the opportunities afforded by diversity and inclusion, which, after all, is the story of our nation, ladies and gentlemen.
So respectfully, we have noticed more women-owned firms receiving more access to capital and opportunities. Let's take a look at Latinos, for example. Latinos are the fastest growing demographic. The American Latino GDP is 2.3 trillion, roughly 20% of the US GDP. However, the investment dollars allocated towards Latino-owned financial firms are less than half of 1% across the industry. And if we looked at the other classes within the MWDBE designation, we would see similar trends and patterns. How do we make this more about the social and economic mobility for people of color?
As many of you may know, the Chicago region has the 5th highest racial and economic segregation in our country. It is of critical importance nowadays. Why? Although many people will suffer as a result of this crisis, people of color are particularly vulnerable. And that means that our response to this crisis, which has been caused by COVID-19, must be swift yet fair, or segregation and inequality will only be exacerbated. Just like COVID-19 has ravaged Latino and African American neighborhoods due to chronic health disparities, job and wage losses have hit Latino and African American families the hardest. 61% of Latinos and 44% of African Americans stated in a recent survey that they themselves or someone in their household has experienced a job or wage losses due to the coronavirus outbreak, compared to about 35% of their white counterparts. Change will not happen on its own, and it won't happen from within. Investors need to make the case, and public policy needs to support it. And that's also why we became the first state to require corporations headquartered in the state of Illinois to report on gender and race and ethnicity of their board members. The new law also requires that companies report on their policies and practices for promoting diversity, equity, and inclusion amongst its board and executive officers. We've also implemented the Garcia Rule, not named after me, but for a different Garcia, which requires the mandatory inclusion of minority and women-owned firms in every search for an external investment manager. Our investment consultants must include at least one manager as part of that search process. We also review a banking institution's record of commitment to its community when deciding whether to do business with that financial firm. Banking institutions with a CRA rating below satisfactory are now ineligible to do business with this office. Lastly, to monitor company progress, since 2017, all financial and investment firms seeking to do business with The Illinois State Treasury must now disclose how their firms are promoting equity, diversity, and inclusion within their own organization. This includes a 360-degree evaluation of diversity among its board, its owners, its executive leadership, its workforce, its supplier diversity, and community activities. And we do this by leveraging what is already being done by the information that is disclosed to the U.S. Equal Employment Opportunity Commission, which captures the various roles at a company by race, ethnicity, and gender. And we will continue to do this on an annual basis because we believe that diversity and inclusion is integral to the investment thesis. And as such, and in order for us to maximize our risk-adjusted investment earnings, we will continue to do this now and in the foreseeable future.
The Illinois State Treasurer's Office has already done so much and continues to lead the way. However, as you mentioned, some progress has been made, but there is a long way to go. How will you and the State Treasurer's Office continue to lead the fight for equity, diversity, and social inclusion?
That's a great question. I always think about the future. What we do now would dictate the future. Similar to the period following the Great Recession, the current economic recovery is serving the well-to-do and the wealthy. Although the U.S. has enacted $3 trillion in government stimulus and $3 trillion in monetary stimulus, the resulting economic recovery to date has benefited those with capital. The glaring disconnect between the real economy of working people with jobs and bills to pay and the investor economy of investors with stocks and bonds is one of the starkest disparities of modern times. Moving forward, we will continue to push towards increasing economic equity to broad swaths of Chicago and the broader state of Illinois. Not just those parts of the city or the state known for their entrepreneurial bona fides. Decades of disinvestment and undercapitalization have left entire communities vulnerable and marginalized. Entrepreneurship is a potent tool in closing long-standing wealth gaps. That is why we have an initiative in the pipeline to invest in marginalized and underrepresented communities in Chicago that we hope to reveal soon. Stay tuned. We also have a number of other initiatives and solutions in the pipeline to increase access to capital, both debt and equity, to build wealth, to boost accessibility to financial tools, and to optimize representation amongst people of color within financial services. These should be rolling off over the next several months. Lastly, we've also established the Advancing Equity in Banking Commission, also known as AEBC. What is this? Well, in partnership with the Chicago City Treasurer, we convene financial institution CEOs across the city and the state to discuss and subsequently join the AEBC in order for us to promulgate the design and implementation of solutions to address the systemic and structural racism within the financial services industry. We must be the action that we seek. We must use this crisis to think bigger. We must recapitalize underserved enterprises with low-cost, flexible capital. We must reinforce our local economies by building structures to support them and employ strategies that promote sustainable economic activity. We must foster innovative strategies such as worker-owned cooperatives, complementary currencies, and stakeholder capitalism to create the necessary foundation to expand the economic recovery to broader swaths of society. If not now, then when? If not us, then who? If not here, then where?
So with that, Rodrigo, thank you again for your time today. It's been a true pleasure having a chance to chat with you. And thank you to Illinois State Treasurer Michael Ferrix, Joe Aguilar, and the rest of the team. And thank you again to Tide, Grace, and Shelby, and the rest of your team for providing this platform and bringing awareness to the D&I issues across the industry.
Thank you for the invitation. It's a pleasure. Usually I'm talking about, the financial markets, investment stewardship, corporate governance, and it's great to talk about the intersectionality of equity, diversity, and inclusion and financial services, or even much more pronounced, the intersectionality of equity and investments. They go hand in hand, ladies and gentlemen. So thank you for the invitation and for everyone listening to this podcast for the Investment Diversity Exchange. We appreciate the time, and hopefully we're able to impart a little bit of wisdom and perspective for you to utilize in your everyday investment oversight and activities. Thank you again.